start streaming.
Now I go here.
Go, yeah, and then open up the other tab.
Wait, first I need to edit it to public.
Okay, yeah, you're right. Do that. Edit to public.
Okay, so send me the link as soon as it goes live.
Okay. Is it live? Is it live? Did you?
Hey Jason, how's it going? I'm gonna start in just a minute. Hey Jason, how's it going? I'm gonna start in just a minute. All right, I'm gonna start the stream in about a couple of minutes. I'm just waiting for a few more people to join. Okay, so let's get started here. So this is the SPY anemoid chart, and this is the DISCI page. Just gonna take away all velocities here. Hey, what's up, Carrick Ape? How's it going, man? That's great to hear that you're digging Anemoy. Really cool software. Okay, so just want to explain what I can see when I'm looking at this chart. So we have the DIA, and the DIA is, most important index, the Dow Jones. So this is the leader of the rest of the indexes. So, usually everything follows the Dow Jones. So we have the IYT, we have the SPY, we have the IWM, we have the QQQ, and using this page, at least on an intraday basis, I'm able to track the direction of the market. Hold on one second. Just gonna turn off. All right, is this better? Is this better audio for you guys? All right, is this better? Is this better audio for you guys? Okay, great. Thanks, Rockets. All right, so I'm watching the DIA, and if you guys know how Anemoy works, I'll just run it really quickly. Okay, great. Thanks, Rockets. All right, so I'm watching the DIA. So drive me. It's not better? How Anemoy works. I'll just run it really quickly. So drive me. It's not better? Okay, thanks, Jason. Okay, so today, basically, I hopped in some UVXY calls. Let me try to figure out the sound really quick. Okay, so today, basically, I hopped in some UVXY calls. Yo, Rockets, I need your help here. What do I do? Okay, somebody in the Mackenzie Rockets want to tell me how I get the echo away? Yeah, the stream's open in the browser. Okay, I'm gonna try to figure this out. 1 second. Okay, how about now? All right, Luke says the audio sounds fine. Is there still that echo? Okay, great. No echo. Okay, perfect. So, all right. So I'm going to take away the 1 and 5 minute velocity. So we have this basic rule in Anemoy. So if I remove everything else, no velocity, no hourly trigger, what you can do is you can just go based on the 1 and the 5 minute triggers. So you have the 1 minute trigger crossing below the 5 minute trigger right here, and you can see that sell off that leads. And then you have the 1 minute trigger crossing the 5 minute trigger right here, and you can see this powerful move up. So if you're trading just triggers right here and you don't do any velocity, you could have taken this long on Wednesday, yesterday, on this trigger cross. The price was about 374. And there's also a rule after every single trigger cross, whether up or down, you usually have a counter trend move back down. So we get this trigger cross right here, and then you have a counter trend move back down to the 1 minute trigger. Right here, this is your long, okay? Let me zoom in. And this is, you see this setup 100 times a day on 100 different stocks. The 1 minute trigger crosses the 5 minute trigger, and then price snaps back to the 1 minute trigger. And then this is basically where the algo of the day decided, okay, the market's going long. At this point, there's nothing anybody can do about it anymore. Doesn't matter if calls are hitting the tape, if puts are hitting the tape. Once you get this trigger cross, you know, the market decided up. So we got this strong, powerful move here. And then if you were just, you know, buying and selling based on trigger crosses, you would have bought on the 1 minute trigger right here at 374, and you would have sold on this cross right here at about 376. Now, there's obviously other ways you could have got out of this trade. So if we look at the 1 minute velocity, let's look for some divergences. Okay, so price originally came up here, and we had the velocity high from this entire move. The highest velocity print we had was a 0.11. All right, then price makes another high right here. Okay, so from here to here we get a new high, 375.10 to 375.85, and on this new high we can see that velocity started diverging. So over here we had a 0.11, and over here we had a 0.09. Now remember, if price ever makes a new high but velocity doesn't, that means sellers are starting to come in. And so if you get three divergences, that's when price wants to sell back down. So make a new high right here with your second divergence, 0.07, not as high as 0.011. And you get your third high into this top. And again, right? So look at the velocity. You get 1 divergence, 2 divergence, and 3 divergence. Right here, this is your first sell signal. So you could have, you know, bought on the cross at 374. If you were holding weeklies, you probably could have got 100% in a couple of minutes on this play, and then price sells down. Now right here, you can buy this again because the 5 minute trigger, all right, we had pretty solid 5 minute velocity, okay? And on the 5 minute level, velocity never diverged. So you can see that on this high, velocity was 0.07, price makes a new high, 0.14, and price makes a new high, 0.17. There's no divergences on the 5 minute level. And so what this tells us is that the move is technically a pretty strong move. So even though if you're watching it on the 1 minute, even though you're watching the 1 minute velocity diverge, so if you want to be really quick, really in and out, then you can sell on the third divergence. But because you had no divergences in the 5 minute level, that tells you there's more to go. And so you could have literally sold at the top right here in the third divergence, and then you're waiting for an attack of the 5 minute trigger to buy this. Now you know the 5 minute trigger is going to hold because you have good 5 minute divergence. So you could have bought again here, 375.74. If you wanted to wait for confirmation above the 1 minute trigger, you could have bought right here, right above 376, and then you ride it up. Now if you'll notice on this move, I'll zoom in again, let's see, 0.17, 0.16. So from this high at 377.40, all right, to this high at 379.15, we have 1 divergence right here. This is 1 new high from here, but velocity did not make a new high. And here's your second divergence. So at this point, you know, you could pretty much be getting out of the trade, and this is, you know, a simple trigger cross, and you just ride it up. So the reason why I'm explaining this is because on the DIA today, all right, then I'm going to tell you what I think is going to happen tomorrow on SPY. But on the DIA today, you can see that this trigger cross happened pretty early in the morning. So we had a 1 minute trigger cross crossing down the 5 minute trigger, which is a pretty bearish cross. So just like over here, this was bullish. If we ever have the 1 minute trigger cross down below the 5 minute trigger, you're basically expecting price to go to the hourly trigger. And the hourly trigger at the time was 373. So once we get this cross right here, you know, it can happen over the course of a day, but this is where you're expecting price to go because these triggers, so let me kind of explain how this works. The 1 minute trigger and the 5 minute trigger are basically buy and sell programs. Okay, so over here, when they cross positive, they're leading price up. So the 1 minute trigger and the 5 minute trigger are both pushing up price. When they cross down, they're both going to be pushing down price. And you see, if I zoom in right here, price tried to break above once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times. Just non-stop. Price is trying to break back above the 5 minute trigger, but think of it as a force. So the 5 minute trigger is just constantly forcing down the market. And if you went short on this trigger cross right here, what would your stop out be? Okay, so I told you where your stop out would be over here. You know, you look for divergences, or you look for price to sell below the 5 minute trigger, or you look for the trigger cross down. So you enter here and you sell on this trigger cross down. But over here, where's your stop loss to the upside? So what you're basically waiting for is you go short right here on this trigger cross. Okay, let's say you get in 375. Now, unless the 1 minute trigger crosses back above the 5, you're short. All right, there's no reason to get out of your short. And you can see throughout this entire time, if I remove price, you can see we call this bear plane setup. A bear plane is when the 1 minute trigger comes up to the 5 minute trigger but rejects it. So you have bear plane, bear plane, bear plane, bear plane. You see how you never have a 1 minute trigger cross to the upside? So because you never have that 1 minute trigger cross to the upside, this tells us that the algos are basically just trying to trap longs. They're trying to trap longs here, here, here. They keep trying to trap longs. Now, why would an algo be focusing so heavy on trapping longs? All right, does anybody have the answer to that? I mean, why not just let price ride down? Here, look, notice over here how price wasn't trying to keep poke its head under the 5 minute trigger, but over here, price kept trying to poke its head above the 5 minute trigger, right? You see the difference? Over here, price was able to ride the 1 minute trigger pretty smoothly. But over here, we just keep having these fake outs. And what this tells me is that the algos are currently trying to trap as many longs as they can. All right, they're trying to grab as much liquidity as they can. They keep making people think there's a chance at SPY going bullish, and then they'll take it down. And then if they want people to think it's going to go bullish again, take it down. They want people to think it's going to go bullish again, and they're going to keep taking it down. Now, it makes the most sense to me for this to happen before a really big move down, because they're trying to, you know, create liquidity in the market. And so what you'll notice here from the Disky page is that once I saw at about 951, so the DIA, which is the leader in the markets, the leading indexes, all right? Once it got that trigger cross, it was pretty obvious to me that the DIA was going to sell towards the hourly trigger. And then, you know, I'm watching all the other indexes. You know, the QQQ was still pretty high at that point, but the DIA was selling. And then if we look at SPY, SPY was still pretty high too, but the DIA was selling. And so I knew that the momentum from the DIA was going to carry over to SPY and the QQQ. And so I hopped into UVXY calls. Now, if you look at UVXY on an EMOI, and so the way I trade the market is I have the Disky page up here, so I could see the big four indexes, the DIA, the SPY, the QQQ, and the IWM. And then at the same time, I'm also looking at the UVXY. All right. Now, when the UVXY breaks above the hourly trigger, it usually means some selling is going to go on in the SPY, and the market as a whole can turn bearish. So right about here, the 1 minute trigger, here, I'll zoom in on this. Okay, so again, you see here, there's a couple of things to show here. So over here, we had the 1 minute trigger cross down, all right? And look what happened at the same time the 1 minute trigger crossed down. I'll show you guys SPY. And your eyes will be open to how easy it is to read the market when you're looking at all of this stuff together. So let's remove, you know, everything besides price. Okay, let's look at the time. Okay, so we have the 1 minute trigger crossing down below the 5 minute trigger at about 12:40 on October 5th. And let's look at SPY at 12:40 on October 5th. right here. Okay, you see that? Oh no, this is meta. Sorry. Here. Now we have SPY. 1240. So you see how the UVXY, all right, got this bearish trigger cross down, and SPY ended up pumping from 374 to 379. So I like to watch these in tandem with each other. If the UVXY gets a bearish trigger cross, then I'm going to expect SPY to start pumping. But look here when the UVXY got a bullish trigger cross at 12:07 on October 6th. So the 1 minute trigger right here is where the 1 minute trigger crossed the 5 minute trigger and started to move up. So this is at 12:10 on October 6th. Let's go back to SPY. Okay, so I just want to make sure I got these times right. Yeah. Yep. So you guys can see this. So UVXY gets the bullish trigger cross at just about 12 o'clock, and SPY at just about 12 o'clock, right, sells down hard and continues selling down the rest of the day. So this is how I watch like UVXY and SPY in tandem, and the rest of the indices to like gauge direction. And then we had this UVXY breakout above the hourly trigger later today. And not only did we have that, but we had the DIA sell below the hourly trigger. We have QQQ, you know, within $1 from its hourly trigger. We have the IWM within $1 from its hourly trigger. We have SPY below the hourly trigger after hours. And so this looks really scary. I'm not going to lie. This looks like, judging by what I'm seeing here, this looks like the market can really, really sell off tomorrow. So I wouldn't be surprised to see like a sell-off towards the 260s. I mean, obviously I can't look at, I don't know what the report will be tomorrow. The job report, I don't know if it'll be interpreted bullishly. I don't know if it'll be interpreted bearishly. But let's just say this was a regular day, and I'm trying to gauge direction. So do I want to be long in this market? Do I want to be short in this market? So I'm looking at a couple of things, all right? First thing I'm looking at is the DIA, because the Dow Jones is a leading index. And I know we have a bearish trigger cross right here, and I know that the rest of the indices are gonna follow, which we saw in SPY, which we saw in QQQ. Now, the question is, right, SPY at its hourly trigger, why don't I think it'll bounce, all right? First of all, you could see the decreasing hourly velocity in the past couple of hours. The hourly velo is coming down hot. So the bullish momentum is leaving. Let's check out a couple of other indexes. Yeah, all right, IWM hourly velocity is dropping. Let's look at the QQQ, hourly velocity dropping. Look at the DIA, hourly velocity dropping. All right, and DIA can print a negative velocity print tomorrow. So here, IYT really close to breaking below the hourly trigger. So a lot of times when UVXY pops above the hourly trigger like this, and we could check the 6 months chart to look for the next target, because just so you guys know this, if you use a Nimoy, whenever price breaks above the hourly trigger, what you do is you look at the air pockets up here. Okay, so UVXY broke the hourly trigger, and I'm long UVXY, full disclosure. Okay, once price breaks above the hourly trigger, what you do is you go to the 6 month chart and you look up here, okay? And the negative tells me that price is above the daily trigger by 6%, and to the upside, there's a 10% air pocket to the weekly trigger at 13.2. So let me show you what this looks like. So a couple more zoom ins should do it. All right, so price is above the daily trigger on the UVXY. And now price just poked its head above the hourly trigger. So usually the next target would be the weekly trigger, which is up above at 1320. So this tells me there's a lot of room for UVXY to run right here, okay? And with a lot of room for UVXY to run to the upside, that's kind of dangerous for SPY to the downside. Now, another thing to look out for is talking about air pockets, okay? So when price breaks above the hourly trigger, you expect it to run to the next trigger at 1320. This is the UVXY. This is something really concerning, which is that if we look at the monthly trigger, all right? And you guys probably won't believe me when I say this, but the monthly trigger at 63.43, this is a 429% upside gap. This can be hit. So what I'm watching for a market crash personally is UVXY breaking above the weekly trigger, because once that happens, it's going to want to attack the monthly trigger. Those are the rules of an EMOI. Air pockets almost always get filled. Now, let's look at the past 6 months, all right? Talk about a market crash and talk about not a market crash. How have they been able to contain this market in a sense? So look at all these rejections off the weekly trigger, all right? We had one here, we had one here, here as well. So all these stick saves that you see in the market when everything's just coming down really, really hard, like for example, this past weekend on Monday, everyone thought the world was ending, right? But what happened? UVXY rejected its weekly trigger. So they are basically turning the market exactly when they need to, because if they let the market slip even $1 more and UVXY ran $1 higher, in any of these situations, what you'd see is UVXY make a fast market attack straight towards to fill this air pocket. And if it does that, volatility goes nuts, VIX goes nuts, market sells to the floor, and that's when you get your black swan event. But look how they've been able to contain this thing, okay? The problem with this is that when does the weekly trigger provide resistance? When there is negative weekly velocity. But look at the weekly velocity, all right? Look what it's doing. So over here, you know, pretty bearish weekly velocity, so no reason to expect the weekly trigger not to provide resistance. All this is normal. All right, so this rejection, normal. This rejection, normal, because we're coming off pretty bad weekly velocity. This rejection, very normal. But look at the weekly velocity now. All right, this print that we have right now is the least negative print that we've had in the past 6 months. And so it gets kind of scary here if you're long in this market, because you're watching the weekly trigger on UVXY, all right? Price closed at about 12 bucks. The weekly trigger is about 13, 20. If UVXY attacks the weekly trigger at this point during this week, then there's a good chance that it could pop above. And once it pops above, there's a 429% gap to the monthly trigger. So not only will I be long UVXY, but that would be my tell in a sense that the market's selling. All right, I'm gonna go over GME right now. Just wanna, I'm just gonna post it on Twitter for a second. Did you guys get that? Does anyone have any questions? I'm looking at the comments. If you guys have any questions. Anybody? Rockets, you still there? Carrick, did you understand all that? I see Turnips is out here. Yeah, okay, so Rockets wants to see an example of a bubble fill. So I'm going to show you guys something really cool. We played this this week, actually. This was incredible. Okay, so I just showed all you guys the UVXY play. Okay, this is an example of a stock filling its air pocket. All right, so we played this. All right, so price was at 660 right here. Okay, and I said, look, we're in an air pocket to the monthly trigger, okay? So let's go long at 660 because we got an air pocket straight up here to the monthly trigger. And what happened? Literally within a couple of days. So this is Monday, October 3rd is when we went long. And today, we basically filled the air pocket. We didn't fill completely, which is kind of normal because if you look at the monthly velocity, it's still pretty negative, okay? So you don't really expect, maybe you kind of do expect to fill it. Who knows, you know? Price at 970 right now, it's been moving in a straight line up, all right? Rockets, you can see this is a really good example of price moving above the weekly trigger and then literally straight up attacking the monthly trigger. Now over here, yeah, Carrick, the air pocket fill is exactly what I'm expecting on BBIG. So here we didn't fill. Let me show you guys why. Okay, so this one didn't fill all the way because the monthly velocity was still pretty bad. Okay, but in this month we had way less negative monthly velocity from here. So negative 0.85, negative 5.8, and negative 4.0. So, and when you have 5 months straight, so 1, 2, 3, 4, 5, 6 months straight of decreasing negative monthly velocity. So let me just remove everything else so you guys can see this. You see how the monthly velocity is steadily getting better and better and better? So that tells me that price wants to attack that monthly trigger. And after price broke above the weekly trigger, it literally filled this air pocket so quickly within 1 week. And believe it or not, all right, I've seen crazier, but this air pocket can fill, like the UVXY air pocket. So let's look at the monthly velo. Yeah, so you see how the monthly velo has been repairing 1, 2, 3, 4, 5, 6 months in a row. This is the exact same setup as the IMVT. UVXY breaks above 1320, can make millionaires. 429% air pocket gap to the monthly trigger. So Carrick, I'll show you BBIG, this setup, because this is a really intriguing setup for BBIG. I'm definitely long here. And so Carrick and the rest of you guys, remember how I was showing you guys before that when the 1 minute trigger crosses over the 5 minute trigger, that's a bullish sign? So it works the same way with the hourly trigger and the daily trigger, okay? So when the hourly trigger crosses below the daily trigger, it's the same kind of bearishness as when the 1 minute trigger crosses below the 5 minute trigger, just on a much bigger time frame. So you could see here how price sold, after this cross happened, price sold almost 90%, right? 274 to a low of 71 cents. So these crosses, 1 minute trigger crossing the daily trigger, is really bearish. But look what's about to happen right now. At close, they're literally equal. So as long as BBIG can hold above 99 for 1 more hour, we're going to get that trigger cross, and then price is going to want to attack this level at 173. Now if you look at the weekly velo, it's been repairing for literally 1, 2, 3, 4, 5, 6, 7 weeks in a row. So this tells me, the fact that the weekly velo keeps getting better and better tells me that price wants to fill this air pocket as soon as we get this cross. So to play this the safe way and make money the safe way, you want to buy shares or you want to buy leaps or long dated contracts, but we're a bunch of degenerates over at Simply Options, so we took next week calls. Because the thing with the Nimoy is that you can kind of see these humongous moves coming before anybody else can. And so if you nail the timing, which is easier to do with a Nimoy than technical analysis or anything like that, then these option contracts can go like 500% really quickly. So, you know, we took next week calls, and if, yeah, Rockets, we are degenerates. If we don't hit, let's say we don't hit this play, right? Let's say BBIG does not spike to 173 next week, then we'll just play it again the next week. And if it doesn't hit it the next week, then we'll just play it again the next week. And even if we miss the first 2 weeks, on the third week, we'd make back all losses plus a humongous gain. All right, let's go over the GME setup, because I know that's what a lot of you guys came here for. Okay. So this is what's bothering me with GME. This daily trigger, monthly trigger cross that we had led to this humongous spike. And then we just had the same daily trigger, monthly trigger cross. And I'm just wondering, you know, I don't know, and I doubt there's any way to know for sure, but just wondering, like, if there's any significance to this. Like, we all talk about algos and fractals and patterns, but, you know, I'm truly wondering if from these daily trigger crosses, right, the same daily trigger crosses, if maybe we can gain some insight into the fractal patterns from that. I mean, if we would have another spike like this, literally, let's say next week, that would be just insane, because I mean that would show you that the whole thing is pretty much running on one fractal. But if without discussing this, just discussing the setup, so the weekly velocity is negative. So even if price would attack the weekly trigger right here, we would expect a rejection. The monthly trigger, so we have also negative monthly velocity right here. And so if we'd attack the monthly trigger, we'd also expect a rejection. So, you know, as each day goes by, this is starting to look a little worse. If I'm being completely honest, there's nothing really screaming bullish at this point. I know there's no volume, and if volume comes back really quick, then, you know, we get some volatility back. Things can change in an instant. But just from looking at it right now with negative monthly velo and with negative weekly velo, just means that like there isn't really that much room to run right here. Now if we move up Friday, all right, so if tomorrow we move up into the end of the weekly velo print is printed at 4 p.m. on Friday. So if we can move up into the end of the week, if we have a big strong green day tomorrow, then things will look a little better. But, you know, for now, I'm just not seeing anything that's screaming buy, besides for the fact that, I mean, we are in a very obvious uptrend. So draw a trend line from here, connect it to this point, connect it to this point. I mean, price is moving up. There's no question about it. But nothing looks out of the gate explosive right now. If we can get back above this daily trigger, things will be a whole lot of a different story. Now, I expected on this day right here to attack this daily trigger and possibly take it, but, you know, we got rejected and fell short. And you can see for tomorrow we have a slightly more negative daily print, so, you know, this isn't looking great right now. On the day trader chart, if we zoom in and take a closer look at the micro, so there's certainly buying going on, all right, and you can see that even here we're in an uptrend. But when we look at the 5-minute velocity, like from this low to this low to this low, there's definitely buying going on the lower time frames, and there's nothing that's giving like any sell signals necessarily. Every time we even sell below the hourly trigger, if I pop on the 2-week chart, we're back on and we're back above in like a day or two. It's getting ridiculous. I think the lack of volume is very much limiting the effect of an EMOI. So here, I mean, you can see a pretty clear uptrend. You know, low right here, put in a higher low right here. Now we're a lot higher. You can also see that like without a lot of volume, without a lot of velocity, without a lot of volatility, the hourly trigger isn't really helping us too much. I mean, providing loose support here, providing resistance here. This provided a really nice acceleration to the upside, but this is when SPY gapped down like $7 overnight. So, you know, it's really stale right now, and I'm sure that's what everybody's feeling. It's a stale time, and I think the best thing to do right now is just not really to pay so much attention at day to day anymore. I mean, I've been trying to trade this portion. I've been very actively trying to trade. You know, I was able to make some money on weeklies on this break above because we had a 3-trigger cluster set up right here. So these triggers were really clustered together. 3-trigger cluster setups are really bullish. So I did go long before close, and I did make some money on weeklies. I wasn't around on this day, so I had to sell the weeklies before close. Thankfully I did. Yeah, Mark T. Institutional buys could kick this off. I have no doubt about this. I have no doubt about that, and I see buying happening on the lower time frames. I'll show you guys what that looks like. If you look at the 5-minute velocity, it shows a really clear story. So let's zoom in here. Okay, so we make our most extreme print right here, negative 108. And then with each lower low, you could see, look at the bullish divergence you have in the velocity. So as price keeps going lower, the 5-minute negative velocity gets more and more positive, and that's why price makes this humongous recovery. And then we sell off again, and the 5-minute velocity is nowhere near as negative as here, and that's why we pop up again. And every time we sell off, we just have these significant 5-minute divergences. So there is somebody buying, somebody big buying at the $24 level, at the $25 level. That's for sure. So I don't think this thing's just gonna sell off anywhere. But is there anything telling me that it's ready to explode out of the gate? No. You know, if there was a chance to explode out of the gate, it was right here. That's the truth. We had some really good 5-minute velocity here. We had a 5-minute velocity breakout. There was just no follow through. No volume came in. On this push up, every single 10-minute bar, the volume was just going lower and lower and lower. And so what I have to say about this is that retail is capitulating at a little point, and I don't mean that they're selling, but I do think they stopped buying. And so I don't think there's a lot of buying going on in GME anymore. I do think it's a ticking time bomb, and you know, yeah, institutional buy can definitely kick this off. Great news could kick this off. A couple of positive quarters could kick this off. But for now, I think in general, I'm going to stop paying attention to the day-to-day of GameStop until this starts looking a little better. So until like the weekly velocity repairs a bit. So I'll show you what that looks like. Until the weekly velocity starts, you know, moving up towards the positive line, and maybe until the daily velocity gets like almost towards positive again. So, you know, it's trying. She's trying. This looked really good. This happens before humongous moves up, by the way. This quickly receding daily velocity while price is remaining flat. This is usually followed by a monster move up, and I've seen it in 100 stocks. Let's see if we have an example on GME. Yeah, we do. So, see how the daily velocity is like quickly receding towards positive. So it's negative, and then buyers are coming in. Okay, buyers are coming in, and you can see that in the fact that the daily velocity is getting less and less negative, but price isn't moving up yet, and then it's followed by an explosion. So this setup is followed by a monster move up. So now that I said that, I'm kind of wondering if we're in the exact same thing right here. I mean, it really does look like it. Daily velocity is getting better and better and better. That's the truth. There's no denying that. There are big buyers here. The daily velocity went from negative 6.5 to negative 3.9 to negative 2.4 to negative 1.1. So the negative daily velocity is certainly getting better. Will this be followed by another monster move up like this? It's very possible. You know, we're going to have to watch the hourly trigger and the hourly velocity for that. If we get some crazy prints like we did over here, this was insane. If you guys remember this was one of the highest prints that GME registered since the squeeze, since January 2021, a 0.8. So yeah, this was monstrous. So I don't know. I mean, you guys come to your own conclusions. It certainly is a very similar setup on a Nimoy. So a Nimoy's tracking the algo for you, and it's telling you that the algo is doing the exact same thing that it did right here. All right, so you guys all see this? I mean, this is what the GME algo did here. The daily trigger sold under, price went sideways, the daily velocity started getting much more bullish while price went sideways, and then we had a rocket. Over here, the daily trigger crossed the monthly trigger, daily velocity is getting less and less negative, price is moving sideways. Will it be followed by a move like this? Well, now that I think about it, there's a lot of theories about next week. There's, what is there, C plus 69 or something like that? I don't know, anybody? I heard like some things are expected for next week. Does anybody in the comments know about that? Is there any theories that are like expecting a pop next week? Because I could believe it. I mean, just based on the similarities in this chart, in this period, in this May period, and in this September period, it does look pretty compelling. So, I don't know. All right, Love, God, and Neighbor. I'll go over AMC really quick, but there's nothing to see here. It doesn't look too great right now. I think, I don't know, unless we were right about that GME fractal, this doesn't look too great. So this is a beer plane when the daily trigger comes up to test the monthly and rejects, and, you know, brought price down from, Wizard of Wall Street says swaps, okay? So you can see this huge sell-off after the beer plane. So Keurig, if you remember, we spoke about 1-minute trigger, 5-minute trigger beer planes. So I'll bring that up for you. for the guys that just joined. Okay, while that loads. All right, so let's bring up SPY. So this is the cool part about a Nimoy is that all the triggers have the exact same rules, and it goes from the 1 minute to the monthly. Okay, so you see this beer plane where the 1 minute trigger came up to test the 5 minute trigger and rejected, and SPY sold off. So it's the same thing in AMC. The daily trigger came up to test the monthly trigger, rejected, and sold off. So I actually don't watch price a lot of the times. I watch the triggers. I watch what the algos are doing. If I'm watching SPY, a lot of the times my chart will look like this. So I'll see this cross and I'll go long. And I'll see this cross and I'll go short. Look at the 1 minute velocity. I see price making higher highs, but the 1 minute velocity is not. I'll sell and go out. But if I see the 5 minute velocity looking pretty strong, then, you know, I'll buy back at the 5 minute trigger. So most of the times I'm not watching price on a Nimoy. I just watch what the 1 minute trigger and 5 minute trigger are doing. What are they telling me? Where are the algos taking price? For GME, while the volume is so low, it's probably DRS. I mean, it's anybody's guess, but it's probably DRS. So yeah, AMC. So again, weekly velocity is negative. So even if price were to come up and attack the weekly trigger right now, where's the weekly trigger? Yeah. So even if price were to come up and attack like 878, we'd expect a strong rejection. Daily velocity is getting better. Okay, so this is a encouraging sign. Now the problem is for AMC today, price broke above the hourly trigger. Okay, right over here. Yeah, no problem, Mark. You're not spamming. Okay, so 13th is when IMX was due to add launch a game via tweet. Okay, we'll see. Look, I mean, I wouldn't be surprised. You all just saw the setup on a Nimoy. If it's the same algo, it's going to be the same algo. So here for AMC, all right, price today. This right here told me that AMC is just not ready to go right now. Maybe something will happen that I'm not aware of, but so price broke above the hourly trigger right here. And I mean, I want you guys to look at this for a second. This is called the pinning algo. Okay, so the pinning algo, it was right here. Okay, so this is price action. 1 minute trigger bringing price up, 5 minute trigger bringing price up, and then them bringing price down. But look what happened here. Literally just, this is pure pinning. Okay, so price and the 1 minute trigger and the 5 minute trigger were just staying still for literally from 10:30 all the way to the end of the day. So for about 5 hours today, I was watching paint dry. It's pretty boring to say the least. So when they run these pinning algos, one of two things will happen. Price will break the algo and fly to the upside, and then you'd get these killer moves to the upside. Or if price isn't ready, it'll start selling off, and that's what happened at the end of the day here. So AMC not ready. GME also doesn't look ready. Sold below the hourly trigger at the end of the day. Not an encouraging sign. We'll check the meme breadth. So for memes, we have 6 long, 8 short, flat 7. If we're gonna have a meme run, we're gonna see at least 10 of these memes long. So I'll be keeping a close eye on this for memes. BBIG looks encouraging. It's above the hourly trigger. I'm excited to see what happens with this play. Yeah, Ape I could look at. 1 second. And then I'm going to wrap it up. Kirk said, but my calls. Listen, man, you got to watch a Nimoy. That's the truth. And a Nimoy, once we sold below the hourly trigger today, doesn't look too good, especially with what I'm seeing in SPY. SPY really looks like it can sell hard tomorrow. So yeah, I mean, Ape challenged the hourly trigger right here and just got rejected and came back down. There is some positive hourly divergence here, so if 8 puts in like one more low, that's definitely a buy. But there's also pretty good 5-minute divergence here. So let me zoom in on this so you can see what I'm talking about. So, all right, so price just moving sideways this whole time, but the 5-minute velocity is going up. That means there's pretty strong buying right here. And then, this sell-off was just the result of SPY selling off hard in the day, which is what happened. So, I don't know. I mean, it's bearish. You want to buy 8, wait till we break above the hourly trigger. If you want to see how much money you could have saved by just playing the hourly trigger on 8, and I haven't seen this yet, but let's take a look for ourselves. All right, so you could have sold ape at $5 and never bought back. All right, this is what happens if you play with the hourly trigger, and you're playing equity especially. So you sell below the hourly trigger and you buy back on a break above. So let's say you got faked out here and you bought back at 384, you could have sold at 376, and you would have saved yourself half your money, because if you held from 543 to 255, you're down 50%. So if you're ever swinging equity, use the hourly trigger. All right, take advantage of this. All right, any more questions? Otherwise, I'm going to wrap it up for now. I pretty much covered what I wanted to cover. What's the free list, Carrick? I don't know what that is. But yeah, I think SPY is about to sell off really hard. And I mean, it's probably going to have an effect in memes. And we'll see how UVXY responds to this. Yeah, I mean, Mark says run could be in line with pressure on banks. Don't forget Credit Suisse appears to be on the hook for our Chagos shorts. Could blow anytime. Yeah, I mean, it could, but I don't look at that stuff. I just look at what's in front of me, and I don't really read into all this stuff as much as you guys. Thank you, Rockets. You're the man. Can't wait to see how so Rockets is working on a the list that we have access to in Nimoy if you're in the free version. Yeah, Ape could be added to the free list. I'll get that done for you tomorrow. No problem, man. Yeah, Rockets is working on an Nimoy bot for our Discord, which is going to be awesome. So, very much looking forward to that. Kirk, you would love it. Reach out on Twitter. But Bam said AMC 750 the next like 14. When could this be? What does he see on a Nimoy? So the thing with Bam is that Bam could kind of cheat and use the Bam model to see the market turning before a Nimoy does. So a Nimoy tracks velocity. A Nimoy can tell you what's happening now, and it's a bit predictive. Okay, so Nimoy is predictive in nature. It's called a Nimoy predictive technology. So all the velocity prints, like the hourly velocity print, comes in the beginning of the hour for the next hour. The daily velocity print comes at the end of the day for the next day. So you know ahead of time what the velocity is going to look like. But BAM can see 2 weeks in ahead, months in ahead, years in ahead. So if BAM can see like really bullish action in AMC, although it doesn't look bullish on a Nimoy now, he can see it. He can call it bullish because he knows the setup, and if it turns bullish in the BAM model, it could turn the Nimoy setup from bearish to bullish really quickly. So that's how he incorporates both of them. I just use a Nimoy, and I found a lot of success using a Nimoy. I mean, a Nimoy literally just tells you exactly what algos are running in the market, if they want to bring it up, if they want to bring it down. I mean, let's look at AMC right here, okay? So you see this hourly trigger, daily trigger cross. This is really bearish, okay? So this is where you want to be selling and price sell straight down. But you see here, this is what we call an airplane. So an airplane is where the hourly trigger comes down to the daily trigger and then pops off, and this is a humongous move to the upside. So it's like using a Nimoy, you can just play these anytime. If a meme stock is going to go on a crazy run, I promise you will know about it using a Nimoy. I promise. I mean, look at the setup AMC made in a Nimoy before making this monster run. It was an hourly trigger, daily trigger airplane. So the hourly trigger coming down to the daily trigger and bouncing off is a very, very bullish setups. John, you should learn about pancakes during the scanner, but you can use the principle in day trader. So is that when like you play the IV crush, where the 1 minute trigger and the 5 minute trigger are like really flat? Like actually we had that in AMC today, and then when price breaks the pin, you play either calls or puts to that direction. Like for example, here on AMC, we saw just really intense pinning on the 1 minute trigger and the 5 minute trigger. And so what happens during this period, guys, is that IV gets crushed. Okay, so while this whole pinning job is going down, IV gets crushed. And so Johnny has this method where he would watch for the pinning algo, and then as soon as he saw price break out of the pinning algo, a lot of times you would get these really sharp moves. Over here, it may not have worked that well, but you get these really sharp moves to the upside or downside, and without even price moving more than 5%, the IV goes crazy, or even back to normal, because the IV is at the lowest points during these pinning runs. Seems like a bit like MACD and EMA at the same time. Yeah, Mark, add in RSI, add in every indicator you could think of, every stochastic, every indicator you could think of in EMOI is basically just a huge all-in-one. So I'm checking the scanner for pancakes, John. I don't see them. But, all right, message me after on Twitter. I'll take a look. All right, guys. So anyone has any other questions? Otherwise, I'll wrap it up right here. I'm going to wait like 2 minutes to see if anyone has anything. Open up one of the clusters. Okay. Here, let's do this one. 3 trigger cluster. When moon mark T? Great question. Rockets. The vape sound. Yeah, absolutely. Moon soon. Sorry, I think it's stocks. No problem. Stocks tab. Okay, where are we going? Okay, Carrick. Carrick says, tell us a bit about your Discord. So, here, let's show you guys. This is what the Discord looks like. You know what? Here, wait. Let me just do this with John for a second, and then I'll take you guys through the Discord. Okay, look at the vertical bars. Okay. Oh. Okay. So, John, you're saying like all of these are basically pancakes. Yeah, don't worry, Rockets. I won't show the bot. Okay, Mark, so is this what you mean? Like when velocity, under the velocity column, you know what, LOL, I'll reach out to you on Twitter. Okay, I'm looking forward. Always want to learn more, especially about an EMOI. Okay, so Carrick. So this is what our, this is Moon, by the way. Really smart kid. So we got the free trial, we got general. This is where we do voice chat. So if I ever take a play, sometimes I'll hop on voice chat and like I'll explain the play live, or we'll have like streams on here to talk about our trades. And then we have, you know, goals, daily video recaps. So Gavin and me will like post recaps about the trading of the day. We have the main trading room where everybody, you know, hangs out, trades. The GME trading plan. This is like the long-term GME trading plan. We have members plays where people take their own plays and profits if they make them. We have 3 trigger clusters specifically for the, like, this is a very powerful Nimoy setup. We have Ortex, so this man gives us like a daily Ortex. John, I'll send it to you on Twitter, just reach out. Daily Ortex updates. Then we have very important fantasy sports bets. We have chart requests. So here, let me show you guys something really cool about this, okay? So somebody asked just recently, he said, where was it? Someone asked about OBVE. Let's see. Okay, yeah. So right here, look at this. Would anyone mind taking a look at the Adobe chart for me? Okay, thanks in advance. And then I checked it out. I said, I checked 2 days ago. It looked like Adobe can really move up. I really, really like this long. And then another analyst said, yeah, might want to take a position myself soon enough. And then this was on September 30th. And if we go to Adobe, on September 30th, right here, this is when we went long, and price actually went from like 275 to 300 today. So it's really cool. You know, when heads come together, like people, you know, it literally mooned. You know, it went up 25 bucks. So this is really helpful. This is the $100 challenge. So we have the alerts here. This is where I give the alerts, and then we have the chat to talk about it and the screenshots of how we're doing. Here we have Gavin's alerts, my alerts, YSL's alerts, and Vinny's alerts, and Vikings alerts. And then Casino Royale is like basically just like lottos, but we actually do really well here. And then here's Gavin's Elliott wave forecast for all of these stocks, and that's pretty much it. So for example, like my alerts will look something like this. Pretty straightforward. So this was one we killed a couple of days ago. So we had AMC calls. We entered at 0.26 and we exited at 69. So that was a really nice win. BBBY 50% on weeklies. You know, Gavin's been absolutely just a monster lately, crushing everything. So yeah, it's a fun time. I mean, if you'd like to check it out, just reach out on Discord. Otherwise, hope you guys all enjoyed that. Hope you learned something. Probably do a couple more of these in the future because they're fun. So yeah, I'll see you guys around. Enjoy, everybody. Have a great rest of your night. Picasso, I like it. Thank you. Kirk, I like you, man. All right, I'm closing it. I'll see you guys.